Did you know that the total number of Bitcoins that can ever exist is capped at 21 million? This built-in scarcity is just one of the fascinating properties that sets Bitcoin apart from traditional currencies, which can be printed without limit by central banks. It raises a profound question. Is Bitcoin merely a fleeting digital curiosity or the bedrock of a new financial system? This single, unchangeable rule of scarcity has fueled a global movement attracting investors, developers, visionaries who see not just a currency, but a revolutionary technology with the power to redefine our very concept of value ownership trust in a world that is becoming increasingly digital and interconnected. The journey into the world of Bitcoin is often filled with complex jargon and intimidating charts, but at its core, the idea is elegantly simple. It is a system of peer-to-peer electronic cash that allows online payments to be sent directly from one party to another without going through a financial institution. This decentralized nature is its most powerful and disruptive feature. Think of it as a global public ledger, not owned or controlled by any single person. Before we delve deeper into the current state of this remarkable innovation, I want to extend a special invitation to you. As of today, September 1st, 2025, the global financial markets are watching Bitcoin with undivided attention. The price for a single Bitcoin is hovering around the significant mark of $125,000. This valuation reflects a period of sustained growth following the consolidation phase we witnessed throughout late 2024. The journey to this point has been characterized by the volatility that Bitcoin is famous for. Sharp rallies, necessary corrections, forging a path of upward momentum. Investors who have been in the space for several years recognize this pattern not as instability, but as the natural price discovery process of a truly new and global asset class finding its footing on the world stage. Market sentiment is currently cautiously optimistic, a stark contrast to the euphoric highs and desperate lows of past cycles. The recent price action is underpinned by strong fundamental factors rather than purely speculative fervor. We are seeing increased on-chain activity, which means more people are actually using the Bitcoin network for transactions, not just holding it as a speculative asset. Furthermore, the amount of Bitcoin being held on cryptocurrency exchanges has continued its downward trend, suggesting that more investors are moving their assets into long-term cold storage. This indicates a strong belief in Bitcoin's future value and a reduced inclination to sell in the short term. This price level represents a powerful psychological milestone for the entire industry. Looking toward the remainder of 2025 and into 2026, a consensus is forming among many seasoned financial analysts and Bitcoin experts. The prevailing prediction is one of continued, albeit measured, growth. Many are forecasting a cycle peak somewhere between $150,000 to $200,000 before the market enters its next major corrective phase. This outlook is not based on blind optimism, but on models that analyze past market cycles, the impact of the halving on supply, the increasing flow of institutional capital. These experts caution that the path will not be a straight line. Significant volatility and pullbacks of 20 to 30% are expected and are considered healthy for the long-term trend. One compelling argument for higher valuation is the digital gold narrative. Analysts at major investment banks regularly compare Bitcoin's market cap to gold. Gold's market cap sits in the trillions. Many argue Bitcoin is more efficient, portable, verifiable as a store of value, and thus has a long way to capture even a fraction of that value. Projections place Bitcoin's long-term value in the hundreds of thousands or even millions of dollars per coin as it slowly eats away at gold's dominance. However, not all predictions are bullish. A vocal minority of skeptics points to regulatory risk as the primary threat. These experts, often from traditional finance and government, warn a coordinated global crackdown could stifle innovation and send prices tumbling. The regulatory landscape for Bitcoin in 2025 can best be described as a complex and fragmented mosaic. There is no single global consensus. Instead, each nation is forging its own path, creating a patchwork of rules and guidelines. In the United States, regulatory clarity has finally started to emerge after years of uncertainty. The Securities and Exchange Commission has established clearer jurisdictions. The Commodity Futures Trading Commission has established clearer jurisdictions, with Bitcoin being firmly classified as a commodity. This designation has been a boon for the industry, providing a stable legal framework that has encouraged large institutional players to enter the market with confidence. In contrast, the European Union has moved forward with its comprehensive markets and crypto assets regulation. This framework, which is now fully implemented across all member states, exchanges must adhere to strict licensing, governance, and consumer protection standards. Custodians must adhere to strict licensing, governance, and consumer protection standards. Service providers must adhere to strict licensing, governance, and consumer protection standards. While some in the industry initially viewed these rules as burdensome, they have ultimately brought a new level of legitimacy and security to the European crypto market, making it a safer and more attractive environment for both retail and institutional investors. Meanwhile, other parts of the world present a more varied picture. In Asia, major financial hubs like Singapore have embraced a pro-innovation stance. Hong Kong has embraced a pro-innovation stance. They are creating regulatory sandboxes and clear licensing regimes to attract crypto businesses. They view digital assets as a key component of the future of finance and are competing to become the continent's leading crypto hub. Conversely, countries like China maintain their strict prohibitions on cryptocurrency trading and mining, focusing instead on the development of their own central bank digital currency, the digital yuan, which offers control rather than decentralization. This divergence in regulatory approaches creates both challenges and opportunities. The overall trend is clear. The days of ignoring Bitcoin are over. Governments and regulators around the world now recognize it as a permanent feature of the financial landscape. The adoption of Bitcoin by businesses and corporations has accelerated dramatically in 2025, moving far beyond the early days of a few tech companies adding it to their balance sheets. We are now seeing a broad spectrum of publicly traded companies, software firms, manufacturers, holding Bitcoin as a treasury reserve asset. They're doing this not just as a speculative bet, but as a strategic hedge against the persistent inflation that's been eroding the value of their cash holdings. This trend has become normalized, with corporate treasurers now routinely evaluating a Bitcoin allocation as part of their standard risk management strategy. Beyond the corporate treasury, consumer-facing adoption is also on the rise thanks in large part to the maturation of payment infrastructure. Major payment processors, financial technology companies have seamlessly integrated Bitcoin payments into their platforms. This means that millions of merchants worldwide can now accept Bitcoin as easily as they accept a credit card, with the option to instantly convert it to their local currency to avoid volatility risk. Consumers are now able to use Bitcoin for online shopping, booking travel, and even paying bills, which is a pretty tangible sign that Bitcoin is evolving into a usable medium of exchange. But honestly, the most profound examples of adoption are happening at the national level. Following El Salvador's pioneering move years ago, several other developing nations, especially in Latin America and Africa, have either made Bitcoin legal tender or have formally integrated it into their financial systems. For these countries, many of which struggle with high inflation, currency instability, and a large unbanked population, Bitcoin offers a powerful lifeline. So the question is no longer if Bitcoin will be adopted, but rather how fast this global transformation will unfold. The Bitcoin mining industry in 2025 is a testament to technological progress and economic incentives. It's evolved into a highly professional, globally distributed, increasingly energy-efficient enterprise. The old basement miner stereotype is gone, replaced by vast, purpose-built data centers in regions with abundant, cheap energy. These facilities house tens of thousands of specialized computers, rows of ASIC miners, close-up ASICs, application-specific integrated circuits that perform the complex calculations to secure the network and process transactions. The scale is breathtaking. A major trend, the pursuit of sustainable and stranded energy sources. The narrative has shifted from criticism to innovation. Miners are co-locating with renewables, solar farms, wind farms, geothermal plants, buying excess energy that would otherwise go to waste. Miners are also harnessing stranded natural gas at oil fields, gas that would be flared or vented, using it to power operations, turning waste into value and securing the network. Hash rate distribution has become far more decentralized. After crackdowns in China, the industry relocated and diversified. North America leads the hash rate. Mining may seem abstract, but it's the engine that powers the entire network. Miners are decentralized bookkeepers who validate transactions, group them into blocks, and add them to the blockchain, securing the network without a central authority. In this journey through the Bitcoin landscape of September 2025, we have covered significant ground. Scarcity, Bitcoin's fundamental property. The hard cap, 21 million coins. Current price, about $125,000. Valuation backed by growing institutional belief, not just speculation. We examined expert predictions. Growth driven by the digital gold narrative. Growth driven by technological advancements. Acknowledge persistent regulatory headwinds. Layer 2 progress promises to unlock Bitcoin as a medium of exchange. We navigated the global regulatory environment. Trend toward acceptance and integration. Different approaches across regions. United States, clearer frameworks fostering institutional confidence. Europe, clearer frameworks fostering institutional confidence. Mainstream adoption, corporations using Bitcoin as treasury assets. Nations embracing Bitcoin for financial inclusion and sovereignty. Professionalized, increasingly sustainable Bitcoin mining, the engine securing the network. Key challenges, scalability. Key challenges, education. Key challenges, privacy. Bitcoin is a peaceful revolution, shifting how we perceive and interact with money. It is a technology, it is a currency, it is a global movement, an alternative to a financial system that has been opaque, exclusive, prone to centralization and control. The path forward will have volatility and debate, but the trend toward a more decentralized, equitable world gains momentum. Your interest places you at the forefront of this transformation. I extend my invitation to you once more. The world of digital assets is dynamic. Staying informed is your greatest asset. Subscribe to our newsletter for timely, insightful analysis. You'll receive your complimentary copy. Bitcoin Basics, your first steps into a decentralized world. Thank you for your time and curiosity.